Watch the video all the way through as we start the new year. I wanted to share with you some thoughts. Again, I am predicting that we'll get a recession and it will hit in quarter 1 or quarter 2 of 2025 as we start the new year for 2025. Here on New Year's Eve, telling you what I'm looking for to happen in 2025. Number 2, the stock market will complete the blow-off top where the recession starts, and that will likely be in January, if not in the first quarter of 2025. I think, as I said, you have about a 95% chance we have the top in December, 99% chance we get it in January, 100% chance we get it during the first quarter if we don't see it in January. I do believe we're going to see a top in all likelihood in December or January, as I've said. So far, our highs are holding in December. I still think the S&P is likely going to make a new high. NASDAQ could have peaked, so could the Russell, and then we'll see what happens with the Dow. The Dow possibly has peaked as well, could diverge with the transfers. I'll talk about that. I think NVIDIA finishes the blow off top, and or may have finished it, and the higher high scenario I've been talking about, and then I think it collapses, and I put collapses and ends the bear market, ends the bull market, causing the AI bubble to burst. I think that Bitcoin will peak in the first quarter of 2025 along with the market in all likelihood, possibly see a January top. I think the upper channel will likely be reached with Bitcoin, though, just very like the S&P. And again, Bitcoin will price in the recession, likely collapse by 80 to 90%. Really, the bear markets for Bitcoin. After the S&P's blow-off top is finished, it will crash by 20% over the next 1 to 3 months. If you watch the video all the way through, you'll see that that's exactly what happened. NASDAQ at the 2000 top, only it collapsed by 40%. You'll see that in the video. S&P will finish the blow-off top. It'll crash by 20%. You'll see a deflationary bust. The S&P crashes. Will panic, do an emergency cut of 0.5% or 0.75%, followed by a series of large rate cuts. Focusing on inflation right now when they should be focusing on the recession. They're making a monetary policy mistake. They're oblivious that a recession is about to start. Investors will celebrate the Fed's cut, emergency cut, and the S&P will get a huge counter-trend rally after dropping 20%. We're going to have a black swan event. It'll be a credit-driven issue with a banking crisis. After the S&P tops and starts a bear market, a black swan will take place. A credit-driven issue will occur, causing a banking crisis in quarter 3 or 4 of 2025, or maybe as late as quarter 1 of 2026. The banking crisis will likely be caused due to the bank's huge exposure to the commercial real estate sector. The exposure is even larger than it was with the subprime mortgage crisis during the financial crisis. President Trump will inherit a recession. President Trump and Congress will successfully extend the tax cuts and get new tax cuts passed into law. However, it'll be a sell the news event, as I've talked about. That's exactly what happened with the tax cuts in 2001. It was a sell the news event. It's too late. The recession will likely have already started by the time the tax cuts pass, new ones, and they extend the ones that we previously got with the first Trump administration. I predict inflation will rise, but the Fed will still cut rates anyways due to a weakening economy and the recession, as they did in 2008. I'm predicting we're going to get a deflationary bust that will resolve the short-term inflation problem, and it will resurface and accelerate after the recession ends, move towards the next crisis, which will be the debt bomb exploding, likely late 20s or early 30s. We will have another inflation problem. I predict that the S&P will move into a bear market and drop by 50 to 65%. By the end of the bear market will end at some point in 2026. The new bull market will begin that same year in 2026. That's the outlook for 2025. Watch the video all the way through. Support the channel with the link directly below that allows me to be able to provide you this information, charts and indicators. Then please consider partnering with me, supporting the channel today. The link will take you to a secured site. You can donate any amount you want. Thank you for your consideration for that. I want to wish everybody a happy new year. Okay, it is New Year's Eve. The market had an abbreviated session for New Year's Eve. It will be closed on New Year's Day. S&P was down 25 points. The S&P dropped by 0.43%. Continuing to watch the gaps. First of all, I want to take a moment to wish everybody a happy new year. We'll be talking about the new year in just a bit. Watch the video all the way through. We're talking about what we will likely see in 2025. The S&P 500 has these gaps overhead after backtesting the lower boundary of the triangle. And we have one up here that started in the triangle before we had the Fed sell-off. The gap up here has already been filled. I believe we'll likely come back and fill these gaps, but as I've said, may come down and fill this gap before that happens at 57.83, and right below that is key support at 56.70, which is the July peak on the daily chart that we've talked about. Watching, do we get a higher low here? Does this low hold, which is at the gap support area just underneath it there? We've slightly violated it over here. We've slightly violated it over here. But this area right here is the gap support. You have a possible head and shoulders pattern, as I've talked about, that could give us a bigger sell-off initially as we start the new year. If we begin to see this break down, there's risk of a bigger sell-off or just coming back and filling the gap. If we get a bigger sell-off and the pattern plays out, we could see it drop from the high down to the low down over here. We could see it drop by about 269 points or so, 270 points right in there. Have a slanted neckline. Then again, we could see the S&P drop down to the 55.61 area, which would be the measurement of this pattern, which would take out the July peak. That is the risk that this head and shoulders pattern plays out. My guess is the S&P is still going to make a new all-time high, but I told you I am looking for a top in the month of December or January. So far, the S&P peaked back on December 6th. So far, that high is holding. Dow peaked on December 4th. The Russell peaked in late November on November 25th. And I believe the NASDAQ peaked right after the S&P 500 around the 16th or 17th, I believe, of December. Something like that. I didn't get the... But remember, the S&P was making lower highs when NASDAQ was still rallying up to new highs. So the question now is, do we get a higher low and try to resume the advance, or do we come down and form a divergence, fill the gap, and then resume the advance, or does this head and shoulders play out and we get a bigger tumble that could take us beyond horizontal support? Go lower, you have a possible larger divergence that could develop on the RSI. This divergence so far on the 60-minute chart gave us a back test of the triangle here, throwing back towards it, and a back test of the broken trend line in the daily time frame. Also may see a confirmation of a higher low or a divergence on the MACD with this low over here. Again, that gave us the initial divergence there on the RSI. So again, going to be watching. Do we get a higher low? Do we get a lower low and get a divergence and come back and fill the gap at 57.83? I talked about this all week and over the weekend. I have 2 more trading sessions left. Again, lighter volume, we'll be watching that. And then next week, we'll have a short trading week. The market will be closed on Thursday, January 9th, in a national day of mourning, remembering President Carter. Will be a short trading week next week as well. And as I said yesterday, our thoughts and prayers are with the Carter family. So 3 weeks of short trading weeks. If we do get a lower low to go back and fill the gap, it might just be that we're getting an ABC move and we get another push on higher. I still think we're likely going to reach that upper channel line in the weekly time frame, as I've talked about. So watching as we go into the balance of the week and on into the following week, into the new year, do we see higher low or lower low, and then do we come back and fill these gaps? I think we will, and I think we will challenge the peak over here to complete a blow-off top. Continue to believe the S&P will likely make new all-time highs, but as I've said, I believe the Russell has peaked, and a good chance the Dow has, but still might form a divergence in the more recent price action with the transport. So again, watching that carefully. Talked about that in my last update. Showed you the chart between the Dow and the transports as well. Now, we're still flirting with this trend line here on the S&P, connecting the low here after the Fed sell-off and the breakdown of our triangle, connected to that July or August low. So we're still right there trying to test this area. We did it on Monday and Tuesday. So far we have a higher low. If we bounce here, then again, this trend line could be a new boundary for the rising wedge. We broke the trend line right here, this black one right here from this low. We broke that with the Fed day and we back tested it. So again, that is the breakdown of a rising wedge. We turned off the red trend line right here, going back to the July peak right there. So we turned off of that with our triangle, or diversions here, and the diversions on the 60-minute chart. I talked about that. I told you I expected pullback, but I talked about the triangle. It can break either way. We had a breakdown with the Fed, a back test of the trend line, and here we are now at this new trend line and our gap support, our horizontal gap support area. So that's where we're at, and that's this little miniature head and shoulders that I showed you on the 60-minute chart. If we break down further, we have a perfectly parallel trend line right here, this black, solid, bold line, perfectly parallel with this boundary right here, which was, again, the upper boundary originally for my rising wedge there. We never did reach it. With the upward breakout of the triangle, we broke down. So again, a perfectly, if we do go lower to fill the gap right here, early on in January, we might fill the gap and this new channel might be established. And if that is the case, we could be on our way to headed up towards the upper boundary of the channel, and that would take us up towards upper boundary of the larger channel in the weekly time frame that I've talked so much about, which I still believe that we're going to reach. I still believe the S&P is going to make new all-time highs to complete the blow off top. Form of diversions right here, or a confirmation of a higher low here on our RSI, and we do have the MACD here going negative, but the histogram also could confirm a divergence or confirmation of a higher low here. So we'll see what happens here. Balance of the week in early January. I think we can get the blow off top, go to new highs for the S&P 500, but then I think the catalyst, I think it's being unveiled right now, and I think that is concerns about inflation, what I've been calling an inflation freakout by the Fed, by the bond market, and by the herd. I think that we go higher, and then I'll be looking at the CPI coming in on January 15th, 2 weeks from now, and then we have Inauguration Day, and again, that very well could be a sell the news event. Bond market is worried about inflation, concerns about, a rip-roaring economy that's about to end, when, again, the recession indicators are telling us the opposite is likely going to be the case here in early 2025. Likely going to see recession. Watching the channel here, watching the trend line, we're trying to bounce off of it or test it anyways, and we'll be looking at that for the balance of the week and going into the following week. Now, just quickly, one other thing. We have this horizontal support from the July peak right below at 56.70. So if we do come down to this trend line and fill the gap, but don't bottom there, the risk is we come down to this area. And if we go towards the target of the head and shoulders pattern, which again, it would be a slanted neckline breaking right here. That would be the trigger point of the pattern. If it's a slanted neckline here, we would go down to the 55.60 area, which would be very close to the 200 period moving average where it's at right now. So again, just some areas to be aware of: horizontal support, the 200 period, the gap fill area, and these trend lines I've been talking about. Now, if the S&P goes a little bit lower, our 20-week moving average here in the weekly time frame is directly below. We could reach that level here and form a divergence. Slightly lower, that is very possible. But again, I'm watching this upper boundary, this upper channel line perfectly parallel with the lower boundary here. We didn't quite reach it. Over the last 9 weeks, we weren't able to reach it prior to the sell-off that we've had since December 6th, or off in the S&P on December 6th. Again, prior to that, the weeks leading up to that, we just were coming close to it, but we didn't reach it. We're probably still going to reach it and end up forming a divergence. It may be close, but no cigar. I told you I am looking for a top in December or January, but I would need to see a little bit more evidence if the top is in fact in. My guess is that we're going to see a January rally, likely over the next few weeks, and then top out reaching this area. I think that will complete the blow off top here for the S&P 500. Although the Dow and the Russell have already reached their upper channel lines, the S&P has not. I think it will. Nevertheless, we have these divergences. Again, possible that they're done. Losing the 50 area, we start losing the 20-week moving average and staying below it, then maybe all she wrote. My guess, though, is we're probably going to get another push higher. Seeing a significant sell-off on the Dow and the Russell, they can get counter trends, and as they get counter trends, the S&P can push up to a new all-time high. Although the Dow, like I said, it still may get a powerful rally and end up diverging with the transports, as it often does. There's a massive divergence already. Longer term, multiple year. We do have this divergence here also playing out, and as I've said, again over here, you've rolled over, but then we still ended up pushing higher a couple times there. MACD, we could see something very similar to that right here, where we turn back up and still get a divergence in this most recent price action. Wouldn't be surprised to see that happen, but rally will likely be, if it does happen, which I think it probably will be the final climax high, likely going right up into that trend line right there. We've broken this trend line right here in the weekly time frame, going all the way back to the August low. You'd have to be able to clear that trend line in order to reach the objective target level here. Now, again, I do want to say, as we go into the new year, again, 9 weeks, the last 9 weeks, we've been watching this trend line. And I told you if we reached it immediately, we can go into that mid to high 6100 area. We took our time. We did not reach it. Trend line, the further right you go to the chart, the higher the target goes. Right now, if we did go to reach it, go into the 6200 or 6300 range, if we did in fact do that. And I think that, again, there's a very good chance we'll still reach this area. Be with the powerful rally back up. The conventional wisdom is, oh, we're going to have this rip-roaring economy. The bond market is telling us, hey, they're worried about inflation. I'm saying, could the inauguration day in January be a sell the news event? Could be. The bond market and the Fed are worried about inflation, which they shouldn't be. They should be worried about the recession. So we'll be watching to see what happens here. Yeah, the S&P 500 in the monthly time frame has slammed up into this trend line, and we did that the 1 month ago, the last day of the trading day of November. Finally reached this trend line, and that was on Black Friday. I talked about this trend line being reached, but I told you I thought we'd overthrow this trend line to reach the trend line in the weekly time frame. Now, again, over the last 8 or 9 weeks, we haven't reached that trend line. Last day of November, we did reach this trend line. I still think we're going to overthrow it. I still think we will reach the trend line in the time frame. We're going to turn here, and I think you're going to form a major top at this trend line that I've talked so much about. The S&P will end up getting a bear market where it will lose 50 to 65% or so. Back towards this midpoint, or to test this pandemic low or take it out as low as the previous two bull market peaks there, 1550, 1575. So those are the levels that I'm watching. That's where I think we're headed in 2025, and I think that will conclude. I think a bear market will likely conclude in 2026. Show you the monthly candlesticks now right here on the S&P. I still think we're going to go a little bit higher, but I want to show you these monthly candlesticks because we got some very interesting candlesticks on the NASDAQ Composite and the NASDAQ 100. We got topping tails in the form of gravestone dojis. This is the NASDAQ Composite monthly chart. And again, I've drawn a parallel boundary from the pandemic low to the 2022 low to the 2021 high. And again, we came right up here. Hang on, my trend line moved on me. We came right up here, and you connect that point, and we slammed right into it. Now we're getting this topping tail. So again, possibly a peak has been put in on the NASDAQ and the NASDAQ Composite. The NASDAQ Composite, all-inclusive, the tech-heavy NASDAQ Composite. Pretty amazing channel, and again, getting that Gravestone Doji. I'll show it to you up close in a second. We look at the NASDAQ 100. monthly chart, linear scaling. Again, we have that same channel, but we overthrew it. Now, in the weekly time frame, I've shown you this channel, and we have overthrown it on the weekly time frame. But look at the monthly chart. We got a topping tail, and we closed back down above the upper boundary here of the channel, and that excludes the little shadow right here, but connects a point here and the peak right here and here. Interesting. So again, are the topping tails that we're seeing in the monthly time frame suggesting a peak for the NASDAQ? Now remember, S&P and NASDAQ sometimes diverge at major turning points. Could the S&P still rise to a new high? We get a rally back up for a lower high on NASDAQ, certainly possible, but very interesting channel here in our linear, with our linear scaling. The NASDAQ 100. NASDAQ composite came right up to the trend line, turned. NASDAQ 100 overthrew that level, but then closed back below it. And that's likely because of all the Wall Street darlings that are on the NASDAQ 100. Have a few stocks really moving the market, which, by the way, is what we had at the 1929 top. If we zoom out and we look at the log scaling for the NASDAQ 100, again, we're coming up and slamming up into this channel line right here. This goes back to the tech bubble top, longer term channel. So you're not only turning off of the channel from the pandemic low with our linear scaling, but you're turning off of the channel here longer term with our log scaling, going all the way back with all the data that we have for the NASDAQ 100 in the monthly time frame. Interesting. And as we're hitting this area, as we're reaching this area, we're slamming right up into that trend line and slightly overthrowing it again from the tech bubble top there. And again, we got a topping tail at the tech bubble top, which I found to be most fascinating. Let's bring up the 2000 top. You could see that the topping tail here formed and marked the top of the bursting of the tech bubble. And that moved on me. That is not the financial crisis. That's the bursting of the tech bubble. I brought it up close, and so these things moved on me a little bit. But the tech bubble label is way up higher, so I brought it down right now. But the trend line here, if we connect them, parallel boundary, and we come up to where we're at with the NASDAQ, again, we're slightly overthrowing it, just barely, a little hard to see, but just barely attacking that upper boundary, and again, also getting a topping tail. Could this mark a top for the NASDAQ? Very, very possible. Very well could be marking a peak. To see it confirmed in January, get a follow through going forward. A very, very ugly topping tail on the NASDAQ 100 and the NASDAQ composite. This is the NASDAQ 100 that we're looking at. I've talked about this trend line. We've reached it. Short just of the upper channel line on the weekly chart, but we did reach it here in the monthly time frame. Just zoom out again, you can see again we're getting that topping tail as we hit this long-term trend line, just like on the S&P 500. The S&P is going to overthrow it a little bit more, like the Dow did on its 125-year trend line. It overthrew it a little bit, but then reversed hard off of it. Bring it up close here. You can see on NASDAQ 100, this is QQQ actually, gravestone doji candlestick. So again, possibly a reversal bar. But as you know, I always say candlesticks are meaningless unless they get a confirmation of follow through. So we'll need to see a confirmation bar in the following month in January, confirming a close below this low of this bar here. So, and we may rally up and get a lower high, diverge with the S&P, or maybe again get back-to-back reversal bars. We'll see what happens, but we'll be watching confirmation of this candlestick, and then we need to get a follow-through that could lead to a reversal for QQQ here. The NASDAQ 100, it was up, only up 0.39%, up just under 82 points. We gave back all of the rally. NASDAQ 100 rose, let me try to get it as accurate as possible here, it rose by 5.83% from the previous month's close, and we ended up 0.39% higher, so we gave it all back, getting this gravestone doji. So again, will that mark a reversal? We'll see. Still might get back-to-back reversal bars, or again, rally up, get a lower high, and then confirm it before the month of January ends. We'll be watching to see how it unfolds, but bring to your attention that we did get that topping tail there on the monthly chart, hitting the trend line in the monthly time frame, long-term on the 100 long-term channel, and that upper channel, we overthrew it their monthly time frame with the linear scaling again from the pandemic low. Here's a Russell monthly chart. Again, we had the big rally on the Russell, gave it back, and a possible reversal bar here in the monthly time frame for the Russell. Down 8.37% for the month. Dow with the similar looking bar. Again, I think it's possible the Dow and the Russell have peaked, and I think the Russell's got a really good shot that it's peaked. It'll likely diverge with the S&P as it did in 2021 and 2022, as I've talked so much about, and I talked about that in my last update. A similar looking candlestick on both the Dow and the Russell. Both have had significant sell-offs. We'll see if they rally back up, and if they do they get lower highs? The Dow still might try to push to one final high with the S&P. NASDAQ could diverge if that topping tail high holds in the monthly time frame, our gravestone doji. That was down 2,366 points for the month. It was down 5.27% for the month. So we'll see if we attempt to rebound. Does our high from December 4th hold? And remember, S&P peaked right after it, but hasn't seen big a sell-off. Dow was down 5.27%. S&P was only down 2.5% for the month. And again, don't have a doji topping tail, or a doji, stone doji topping tail like what we have there with the NASDAQ and the NASDAQ composite. I still think we're going to see the S&P move to new high. So again, the topping tail on NASDAQ 100 suggests we might see a divergence between the two. He was down 150 points, almost 151, just under that level, down exactly 2.5% for the month. So again, going to be looking, we can reach that weekly upper channel line and overthrow the trend line in the monthly time frame, watching to see how it unfolds. Again, it's possible we have a top in December. My guess is that we'll still see the S&P move to new high. That upper channel line, we did see the upper channel line reached with the Dow. It may hit it again if it moves to new high or lower high, but I do believe we'll reach the upper channel line. The Dow did and the Russell did. The S&P or NASDAQ came just shy of it. NASDAQ composite hit it in the weekly time frame. Here's the NASDAQ composite monthly chart. Again, that gravestone doji looking just like the NASDAQ 100 here in the monthly time frame. Remember, the NASDAQ went up while the Dow was dropping. The Dow ended down 5.27%. The NASDAQ had a rally of over 5%, but gave it all back and only ended up 0.39% higher. So very interesting. Be watching to see if we stop making new highs. Again, when you get candles like this, you got to assume that's a top until proven otherwise. We see a push above this area. So again, any rally back up is likely going to be a counter trend, or at least it has a good chance of being one. Watching that NASDAQ candlestick. Quickly, if we look at the NASDAQ 100 top in 2000, we got that topping tail. I already showed this to you on the monthly chart. This is the monthly chart again. The next bar got confirmed the pattern, almost a spinning top looking candlestick here, that massive topping tail, but it never recovered back up to that area. Do we get something like that again? We'll see. I just want to make you aware of this because, again, we could see a rapid drop in the market, like NASDAQ right here at the 2000 top. That reversal bar, after that reversal bar, the bottom fell out of the NASDAQ, and it ended up dropping 40% over that 3-month period. And again, even the 2-month period from this topping tail high, by the April low, the March high, to the April low, just over that 2-month period, again, about a 35% drop or so, and again, did rebound that month and then sold off even further and made another lower low. A 40% drop over three months, it lost nearly half of its value. That would be like NASDAQ dropping right now about 8,800 points, maybe 9,000 points. That'd be like NASDAQ dropping back to the 13,000, the low 13,000 area. That's how significant this drop was. And again, people are in denial, and they were back then. Nobody thought that would happen. When we bottomed out, we started to rally back up, that everybody said, oh, it's over, it's over. It wasn't over. It went on to drop over 80%. Keep that in mind. A drop can happen very, very quickly, and we got that topping tail. So just things to be paying attention to. Does NASDAQ stop making new highs? And even if it even if it is that we see a bounce in January, does NASDAQ participate or does it not participate? Here, we never went back to revisit those highs until years and years later. Even with the rally, with the new bull market after this, we never did reach that peak. It wasn't until the next bull market began in 2009 where we finally moved above this high. Food for thought. We had a 40% drop quickly over 3 months. Say if we see similar to that, we could see the Fed really begin to panic, see those emergency cuts I've been talking about. Showed you the channel in the monthly time frame going back to the pandemic low with the NASDAQ composite channel goes back to 2022. Not as far as 2020, the pandemic low, but you also have another channel that we did turn off of right here. Again, could we rally back up and again get a divergence or get a lower high with those topping tails that we had in the monthly time frame? Very possible. Before the month closes, we could see confirmation by the end of the month of January of those monthly charts. We are still not rolling over here. Again, on the MACD, we'll be watching to see NASDAQ Composite, NASDAQ 100 attempt to get a counter trend, and if we stop making new highs on both. There's a channel on NASDAQ 100. I showed this to you earlier in the monthly time frame. Here it is in the weekly time frame. We actually overthrew it, but then turned that back down, and that gave us that topping tail in the monthly time frame, just overthrowing this area. Now I have another trend line right here I'm watching. We came to just shy of it. A little hard to see right here. I'll show you up close. But anyways, pretty interesting. As we have these divergences on the RSI, and you've got it down here on the MACD. It hasn't rolled over yet. Can we tick back up? We'll be watching to see how this unfolds. We'll be watching to see how we close the week out as well on this short trading week. Lighter volume. This is our linear scaling, that longer term channel. The data that we have from NASDAQ, that's a log scaling. It's a linear channel, and again, we fell just shy of that black trend line right there, just shy of it. If we exclude the shadow over here, well, then you've reached it. So again, did we just get a topping tail there in the monthly time frame? We'll be watching and to see if these divergences start playing out immediately, or if we buy a little bit more time and form a lower high or go up maybe and hit that upper channel line. Maybe again, back-to-back reversal bars, maybe back-to-back topping tails. We'll be watching to see how it unfolds as we move into January. Likely forming a major top. Could already be in on the NASDAQ. My guess is it's not on the S&P. We'll be looking for clues there on the Dow. My guess is, though, also has likely peaked as well. Or as I've been saying, the two are diverging. Topping tail doesn't play out. We still have our log scaling here in the weekly time frame. And again, that could still take us higher. But you got a topping tail. You have a shot at a peak there on the monthly chart. I look at both the log and the linear. They're a little bit different with the trend lines.